The Aussie dollar is riding higher again. The currency is establishing itself solidly above 74 cents this week, a 2.5-year high. The Aussie dollar has now gained 4 cents in the month since the RBA announced their big stimulus package. But the RBA likely isn't too flustered. The Aussie dollar's gains have been more about broad US dollar weakness. The euro, the Kiwi, the Canadian dollar, and the Korean won have all reached 2.5-year plus highs this week too. And if anything, the Aussie dollar has been lagging its global peers lately. Reflecting that, the Aussie dollar trade-weighted index remains a good 2% below its August 2020 highs, despite Aussie US's gains in recent weeks. The US dollar has been breaking down against the background of another very buoyant week for global markets, driven by renewed Washington COVID relief talks, firming Chinese activity PMIs, vaccine rollout plans, 11th hour Brexit deal hopes, and the passing of US election uncertainty. The deployment of vaccines next year and continued reflationary fiscal and monetary policies across the globe set the stage for a global business cycle upswing that will maintain pressure on the US dollar in 2021. The US dollar's recent weakness needs to be viewed in the context of a considerable loss of yield appeal for the US dollar in the last 2 years too. In late 2018, the US 2-year bond yields were trading around 300 basis points above G10 peers. That yield spread advantage has now been trimmed to a negligible 50 basis points. Admittedly, interest rate differentials have not driven the US dollar's latest leg lower, but they are an important background medium-term fundamental driver. In fact, the US Fed meeting in mid-December is likely to put a spotlight on the US dollar's reduced yield appeal. Vaccine rollout plans and renewed COVID aid package hopes argue against a dovish Fed pivot on the 16th of December. But the labour market cannot wait long enough. More US cities and municipalities are reinstituting suppression measures than easing them, and the immediate US growth outlook is unclear. That argues for a dovish Fed in a couple weeks and continued pressure on the US dollar. On the vaccine front, the race to vaccinate has started. Shots will be dispensed in the UK in a matter of days following Pfizer's early UK approval. The US is not far behind. The FDA meets on the 10th of December to discuss Pfizer's vaccine and on the 17th of December to discuss Moderna's vaccine. Emergency use authorization could see vaccines deployed in the US less than a week later. But there will be hiccups along the way. Pfizer and BioNTech had been expecting to deliver 100 million vaccine doses worldwide by year's end, enough to vaccinate 50 million people. But those plans have now been cut in half after the company reported raw material supply chain bottlenecks. The company still expects to deliver 1.3 billion vaccine doses in 2021 though. The EU, Australia, Canada and New Zealand are all on slower timelines, and Pfizer's delays won't have any material impact. Regulatory approval in these countries is likely to come in early 2021, and vaccination is expected to start around March 2021. Meanwhile, local news for the Aussie dollar has been mixed this week. Australia's strained relations with China hit a new low point. On current trends, China seems more likely than not to impose further import restrictions. But on the plus side, Australia's Q3 GDP rose a stronger than expected 3.3%, driven mainly by a reopening-led rebound in household spending. Altogether, further gains for the Aussie dollar seem likely into 2021, if there's a dovish Fed pivot in December and as vaccine rollout feeds optimism on global recovery prospects. We'll speak again next week.